Steve, welcome to the Shift Podcast.
Great. Thanks for having me.
I'm excited to chat with you here in person. I've been looking for people locally based, like nearby, to really have a conversation about entrepreneurship and tech and all the awesome things that you've been involved with over the years and the new stuff that you're going to be doing. So I'm excited to get into that. But you had a really exciting career as well. So let's just take me back to like what you studied. Why did you study what you studied, and kind of just walk me through your career path up until today.
Sure. No, happy to do that. Well, first and foremost, thanks for having me. I'm excited to be here today. I'd love to spend some time just chatting about that. So for me, just a guy grew up here in Northern Virginia. Always had an interest in business and specifically finance and numbers. So I knew early on that I wanted to study business in undergrad. So I did that, focused on finance. I started shortly after my undergrad working at a commercial bank based in Baltimore, learning to be a commercial lender, providing debt and financing products to small and medium-sized businesses. Really enjoyed that a lot. Picked up an MBA in finance while I was at the bank, and spent about 4 or 5 years at a commercial bank right out of undergrad. And then I moved over to GE Capital and spent about 10 years there, primarily in credit underwriting, business development, providing financing and liquidity to small businesses. And then I moved into sales and spent a number of years at GE Capital on the syndication side, which I really enjoyed. And so wrapped up there after about 10 years, and then moved to a private equity firm, MCG Capital, where I started a syndication desk for them. So primarily focused on supporting MCG Capital's providing debt and financing for private equity firms to purchase middle market size companies. So MCG Capital would go in, support private equity, help them finance the acquisition, and then I would look at those acquisition loans on a post-close basis and basically break them up and sell them to other banks and finance companies as a way for MCG to manage their overall credit appetite for specific private equity funds and or companies. So I really liked that. And so after that, moved on to a finance company based here locally, running and managing their telecom lending space. Did that for about 6 years, managing a portfolio of anywhere from $500 million to $1 billion, just helping small telecom companies across the country with the appropriate growth capital, M&A capital, real estate capital, so they can continue to grow and provide their services to their constituencies. So I did that for several years and really liked financial services, but I found myself in late 2015, really looking for a change, right? And so I had been in financial services for about 20 years at this point, really enjoyed a lot of aspects of what I did: sales, business development, credit analysis, risk management, risk analysis. But I was really looking to do something a little different. And around that time, we were presented with an opportunity through my wife's career to relocate to Seattle, and she accepted a role at Microsoft. And so we found ourselves growing up on the East Coast, primarily involved in working in the DC, Baltimore area. We found ourselves as mid-career professionals in a brand new city, in a brand new sector, without knowing a lot of folks. And that was very interesting. So I spent a few years initially at Microsoft in their captive finance company, helping them provide financing to some of their enterprise level customers, specifically for cloud as well as software licensing financing. So did that for several years. Also worked there helping to develop and launch financing solutions for their new line of computer hardware. So right around that time, 2016 or so, Microsoft had launched their Surface line of products, and they were looking to develop a financing capability so that they could sell throughput, not only in the States, but globally. And so the team that I was on helped work and develop and launch some of those financing programs. And then from there, just really enjoyed the Microsoft experience, and being at a very large company with a global reach you have an opportunity to do a lot and get involved in a lot. And for us, after being in Seattle for 2 or 3 years, 3 years or so, we decided to move back to the DC area. And again, being at a large company like Microsoft, there are opportunities to do that. So I accepted a role with Microsoft, a new role at Microsoft, back in this area in Reston in the federal consulting business, and then from there just spend some time as a chief of staff, business manager, ops manager, and some of those roles up until late 2021. And then I moved over to one of Microsoft's wholly owned subsidiaries, primarily in a chief of staff role, and did that for about 3 years, and decided to leave that role and leave Microsoft in late November, right around the end of September of this year. And one thing that I've noticed through my early parts of my career in spending time providing debt and equity liquidity to small businesses and helping them with the financing that they need to drive their business plans, you either get comfortable in that space and providing that liquidity and providing that expertise, or you develop a desire to do those things on your own, right? And so one thing that became abundantly clear to me in my last couple of years at Microsoft was that I wanted to spend time, dedicating my skill set and my talents to growing and building something on my own, seeing all of the really great examples that I'd seen, not only at Microsoft and some of the other operations groups that they have, but earlier in my career, just supporting entrepreneurs. And I knew at a certain point that I'd like to, look at a venture that made sense, that I could really, transfer skill set. And so, again, just decided to make that decision at the end of September. And one thing I can tell you is that no matter how hard you work in your role, a full-time role, it does not compare to the things that you're asked to do and you need to do when you move from a corporate role to more of a self-venture or a startup phase, right? And so over the past 60 or 90 days, I've become the chief legal officer, the chief marketing officer, the CFO, the chief, chairman of the board, you name it. I've done it all. Very invigorating, very stressful, and a lot of work. But at this point in my career, I don't think I have it any other way.
Mm-hmm. Your background is so intimidating to me because I'm more on that creative side. I'm more on the people side. So whenever I hear people talk about finance, and you have so much finance and that analytical thinking, I'm always so impressed and at the same time intimidated by people like that because it's such a skill that I lack. And it's one of those things that just take a lot of work for me. Like if I have to look at an Excel sheet for me now, if I have to do accounting, like I just can't, I just can't, I outsource these things. And, and it's always interesting to me. Did it always come naturally to you? Was it something you were just into numbers from the beginning?
No, I've just always have been very intrigued by numbers. My colleagues and friends will tell you that what I really focus on, well, first and foremost, I'll tell you, I don't like Excel. I don't like pivot tables. That's not my thing either. Really what I do is I spend time looking at the numbers, analyzing trends. All of that is really cool, but the real benefit and the value of doing all of that analytical work is determining what pieces and parts of that information can you glean and pull out so that you can make real-time business decisions. And I think that's where a lot of people get stuck. The work isn't in looking at the numbers and understanding the numbers. The work is really, and now that you know what the numbers are saying, what do you plan to do about it? What decisions are going to be influenced by that information? And I think that's where a lot of people get caught up. It's not in the analysis, it's in the application, right? The analysis is super tactical, and making the decisions based upon that information is the strategic. And I've always been more focused on the strategic side than the tactical side.
That's really interesting. And so this podcast really is around, people's careers and shifts and entrepreneurship. And I'm just curious from your experience, you've done a lot of shifts in your career, your life. What has been the hardest or the most challenging, you would say?
Yeah, I would say for the most part, I think what's most difficult is that when people are looking to make a change, a decision, or a shift, they're always doing some form or fashion of risk analysis, right? But I think where people get caught short is that you're not going to have all of the information, right? So certainly you assess the risk, you quantify the risk to the extent you can, but part of it has to be kind of a gut feel and a gut decision, right? When I think about, again, some of the basics of finance, that whole equation around risk and return, right? High risk, high return. And I think a lot of folks feel like they want low risk but high return, and that's not the way that the analysis works, or that's not the way the equation works. So I've always taken probably above average risk, only because I know what my capabilities are, right? And I know what my value is, right? So my whole thing is that if you make a decision that's risky and you've done your homework and it doesn't pan out, it's not the end of the world. You can self-correct, right? No decision that we make is permanent, right? So if I overstep or I take a risk that's too high and that risk does not pan out, you regroup, right? And I think oftentimes people are looking for guarantees and they're looking for answers to all the questions before they make that decision. And I've always, you get me to 80% and I feel like I have enough to make a decision, right? I think people get muddled in that last 20%. And because they can't get clarity on that last piece, they end up putting a decision off, or they end up putting off the risk assessment. So I've always decided that as long as you have good information, make the best decision that you can, and then self-correct if that's not the right decision, right? And so I know early on, even at GE Capital, I had opportunities to take roles internationally. And so what I did notice early on in my career there was that the people that took those international roles, they were able to escalate and kind of grow their career more quickly, right? And so I looked at opportunities to go to Tokyo and opportunities to go to London, and I didn't make those decisions. And I think that's a regret that I have. But again, earlier in my career, I was really focused on really understanding and assessing all of the risks, and I got caught in that last 20%. Right. And so you learn and grow over time. And I've learned over time that you're not going to have 100% of the information. You get yourself to 80, make your decision and go, and then correct if you need to down the road.
Yeah, I always say it's a process, and a process takes time, no matter what that process is. And in your case, just because becoming from very analytical background and mindset, from at least I work with a lot of software engineers, and they tend to be very perfectionist. Like if it doesn't make sense 100%, if there's not certainty, they tend to go away from that particular, decision and thing. So I think the fact that over time you then realize, then part of it is just experience, and that's the process that you have to go through. Like you can't speed up that process sometimes. Sure. Because I'm sure if you're working with younger finance people or super analytical people, they're probably still very perfectionist driven. That can be detrimental, and might have regrets, or But then again, I mean, life takes you in certain ways. So yeah, maybe it's good you didn't go to Tokyo.
Yeah, no, it's not always a comfortable space. I mean, one thing that I've learned over time, and my early training and career, learning to assess credit risk for small and large companies. You look at an opportunity to lend or provide or invest into a company, and you have to make an assessment on their ability to repay, or your ability or the company's ability to generate a return on that investment that meets your hurdle, right? So it puts you in a very uncomfortable space where you have to look at the company's operations and determine right now what their operations and their financial statements are going to look like 5 years from now. Very uncomfortable, because you have to make assumptions. You have to write those assumptions down. And that's all good work. But what most people get concerned about is like, okay, so my analysis says this company is going to be worth $100 million in 5 years. What happens if it doesn't get there? And that's the area where most folks have discomfort. Mm. Well, the analysis isn't whether or not they get to where you say they'll be in 5 years. The real work is in whether or not you made the right decision based on that information, right? And so, what I share with teammates and colleagues, I'm very comfortable in documenting a set of assumptions and making decisions based upon that. And I think that's more of an art than it is a skill. And I just learned that through my financial analysis and my early training. Most folks will have a lot of discomfort around saying where they think their unit or where they think their team is going to be a year from now. Well, in my early career, programming and analysis, I couldn't get a deal done without doing that work for every opportunity, right? And so I literally did that thousands of times. So I'm comfortable in projections and making analysis and making assumptions. And I try to share that information and bring my teammates along with that.
You mentioned something earlier, it's like you were kind of used to, having that risk appetite. And I feel similar because when I was growing up, I grew up with a father who is very entrepreneurial, had several businesses growing up. So it was like in my head, I knew like I've always wanted to do business and I knew that there was a level of risk. And what I loved about my father, and even my mother to an extent, she also had kind of dove into business a little bit, but she was mainly like a stay-at-home mom for majority of the time we were growing up. And one of the things that I really appreciate about my dad, what he taught me, and something you mentioned as well, is like, what's the worst that will happen? Like, okay, we try it doesn't work out. Like that was his mentality.
Yeah.
And that's what I credit my kind of ability to create and to build and be excited about things and so on, and to try things. That's where I credit it to. In your case, where do you think that comes from for you?
So I think for me, like I grew up in a household where it was very important for us to study hard, do well in school, contribute to society, but find that job and that opportunity out in corporate America, and then take every advantage that you have in growing and excelling in that role, right? So that's kind of what my parents shared with me, and for a long time, I thought that was a great idea, and I did well in that environment. But I think over time, when you have really positive examples of people that have branched out and have done things that have been disruptive and that have been, very successful, you have a desire to try that. You have a desire to understand really what that feels like, right? It's a different set of, it's a very different feeling of discomfort at times, a very different feeling of success, right? And so the fact that, the buck stops with you, you own the decisioning, both positive and negative, are things that I developed a passion for later in my career. And a lot of it's just based on, again, early in career, Steve, we have an opportunity to put a $30 million loan into this company. What do you think about the prospects of that opportunity? Well, I can very easily look at the financial statements and tell you with a fair amount of certainty where I think that opportunity is going to go. But we don't always loan money to companies. We loan money to people. Right? Mm-hmm. And so that's the area where I spent a lot of time working with the management teams of these companies, understanding their strengths and weaknesses, understanding where we may need to pivot and make changes, understanding where we'll have areas of risk in our deal based upon the leadership team's ability to execute. And what does that assessment have? How much does that assessment have bearing on our ultimate decision, right? So to me, it's really been wanting to be involved in something more entrepreneurial. Very selfishly, I want to make decisions, right? So good or bad, right? Yeah. So that can be a good or a bad scenario, but I want to be in a position to make the decisions. And I want to be able to be in a position to be a disruptor, right? We've really seen great examples in the marketplace. Uber, for instance, disruptor. I'm not at this point, a strong proponent of crypto, but disruptor, right? And so certainly I have more I need to do to understand that. But those folks that are early innovators in those fields, there's a lot to be said for that. Mm-hmm. And so I'm looking for opportunities where I can also be a disruptor, right? And so I think, the first folks into a field, folks from the outside will look and say, not sure that makes sense. But isn't that always the case, right? The first person to do something, people probably thought, not sure about that. So I want to look for and involve myself in those types of opportunities. So that's what I'm looking and searching for. And, since I've, started on this entrepreneurial track, pulling together a management team and some partners. And what we want to do is create a venture studio. So we're raising money and we will use those proceeds to launch startup companies, right? And so we'll launch startup companies. We will grow and operate them. And as they grow, we will instill and put management teams in place. And then we're off to developing and building and launching that new startup. So super excited about it. The venture studio is a new term in the financial services field. It's kind of a new take on a private equity firm. So I'm really excited about that. But, we're very early on. And so, again, just still looking to raise capital and, more importantly, building out that leadership team so that we can start thinking about some of the ventures that we want to bring to market.
Mm. Yeah, it's interesting when you were talking about having the right team. I remember when when I had my first startup in 2019, we used to pitch like dozens of investors, and we went through several accelerator programs, which was super helpful actually. And I remember it was like drilled, like they want to, they're going to buy the team. The idea is one thing, but they're going to buy the team, the passion,
sure,
and so on. And now that I'm doing my next startup, this is kind of something that I always keep in mind. And it's difficult because you never know. Like, it's difficult to find. Let me rephrase. It's not that it's difficult to find the right people. I think, at least what I've learned in my first business is that, one, I don't need to have a company. I've recognized that I'm a creator. I'm a builder. I do not need to be a CEO. I am a CEO technically in my company now, but like I don't want, like, it's just on paper.
Yeah.
But it's like I don't need to be that. I just want to create and I want to build. And I think the hardest part when you're starting a business like startups world is, at least for me, and I'm curious to hear your opinion, is like who you become and what you find out about yourself. Because at that time this was 5 years ago, and I was so excited. I was like, oh, this is going to be awesome. We're going to have this company. And we had like 11 people, and I was like, I can't deal. Like my business partner was doing like all this stuff. I'm like, I'm just not, like, I can manage people. I just don't want to. Yeah. You know what I mean? So like how, for yourself, like what has been some of your lessons? And then when you search for talent, what are some, I guess, ways to minimize risk of, things going the wrong way? Let's put it that way when it comes to like teams.
Yeah, I can tell you, it's very interesting, the point you just hit upon. I spent so much time in my career in sales that I never really spent a lot of time as a manager and a people manager, right? So when I got presented with opportunities later in my career to do it, I would say no. Like, I just, I really like the opportunity to contribute. I like the opportunity to know what I need to do in order to excel in my role, and the prospects of guaranteeing that for tens or hundreds of other people, really uncomfortable for me, right? Mm-hmm. I've done it, but I'll be the first to admit, even in interviews, I'm like, I'm happy to manage people later in career, but it's not my strength, and I'm not that great at it, right? So, knowing your challenges it's half the battle, right? Mm-hmm. And being able to verbalize it is the other half of the battle, right? And so I can tell you that I knew early on that I have an interest in executing and excelling in roles and developing and executing strategy. I love people. I love spending time sharing and imparting wisdom with people. I'm just not that manager type, right? So even now, when we think about this venture studio, the fact that I have to have a team around me, that's great, but I'm going to need someone to manage the whole people aspect of it because it's not my forte and it's not where I excel. Again, knowing that is half the battle. The other half is actually planning for it. So I'm working through and better understanding what my plan is for that. But I can tell you that the folks that I will surround myself, it won't be a scenario where I'll have to manage them. These will be people that I know and have worked with and understand and have grown with over my career, right? So I tend to think about the people aspect of it a little different, right? Think about, people that have excelled and done very well through their career. Think about taking the top 5 people that you have really enjoyed working with and being able to pull them all together at once in creating something, right? Yeah. That to me doesn't sound like work. That to me sounds like fun. Yeah. Even if you're working, all day and all night, doesn't sound like work to me. So that's really what I'm looking to do. I've had several mentors in my career. How great would it be to be able to pull them all together and have those men and women on my leadership team? That's really what I'm looking to create right now. because then it doesn't feel like work.
Yeah, no, it's you're right. And then everybody can just focus on their area of strength.
Correct.
Right. And then it just makes it that much easier. And I think that's usually so I do some work with like small companies, and usually companies starts to struggle with talent and performance when they get to like number 50. Got like 50 plus, because up until that point you can bring on the high performers, you can bring on people just like you who are like super go-getters, they're really really smart and so on. And then after a while you essentially have to bring on people that might not want to, might just need a job, and you just need them to do a job, but they need a certain level of management, and performance issues might come in, and it's just what it is. Usually it's that like number 50 that's small companies kind of see. And that's when they usually like, call people like me, and that's the kind of some of the problems that we solve. But it's that number 50, and to your point, and it's like it's just much more effective and efficient if you bring in people that one can do the job, because that's half the battle, is the relationship building aspect of a team.
Sure.
Right.
Sure. Yeah, no, that's very interesting. I think one. I just noted number 50 is where I need to really, because again, right. So when I grow and build, I'll be very purposeful to only get to 49, just based on what you just mentioned. So appreciate the insight on that. But I think the thing that I would say about that is that what I have seen across my career is that when you think about folks that really excel and do well in their role as an individual contributor, are not necessarily the folks that should be put into management roles, right? And so what typically happens, Johnny is an awesome developer, right? Johnny's entering towards, late early career. We want to make Johnny a manager. Well, one, did you ask Johnny if he wants to be a manager? Did you ask Johnny why he thinks he would be a great manager? Typically, companies don't do these things. They just call Johnny into the office. Johnny, you're now a manager. You've got 5 people. Well, I think our tack should be, there are folks that really want to be individual contributors as long as they can grow and excel in that space, right? And then there are folks that maybe not as technically talented or may not have expertise in a particular tract, but really connect with people and have the ability to lead. I feel that we should have managers managing people, motivating people that may or may not have a connection to the work, right? Like a manager of software developers doesn't necessarily need to be a developer, but can this person motivate the developer to do the best and create the best each and every day? That's a manager that I want. Whether or not this person is coding is really not the question or the answer, right? And so I think, again, I'm sure there are people that disagree or think otherwise, but it would be great to have discourse in a conversation around that, right? Do you have to have a background in the area of the folks in which you're managing? Or can you be a proven connector, a proven motivator, and a proven leader and be able to pull through the best and the brightest out of that team? It's a very interesting question, one that I think we should spend more time looking to answer.
Yeah, I mean, I tend to be biased, I guess, because I'm in this area of work. But even I've hired also a number of coaches and personal brand coaches and personal training coaches and career coaches and business coaches, etc. And they don't necessarily come from my background. And what makes a great coach is the ability to create the space for people to come to their own solutions potentially, right? By asking the right questions.
Sure.
Right. So it's really just ability to, I think part of it is just ability to allow the space for the person to be open and to feel safe. And I think that's what a lot of managers can do, and to really get to know them one-on-one. And that's what a lot of people, unfortunately, in organizations today don't spend time on, is getting to know their people. And that's the issue, because everybody's very different and you have multiple generations and so on. And it's a very complex place at work. But I tend to agree. I don't think you necessarily have to come from that background. I think you just have to be really good at your craft. And if it's managing people, motivating, knowing who to ask right questions to ask, and so on. So I tend to agree with you on that. I'm curious, what are some trends that you see in your industry? What are some things you're keeping an eye on? I know we can't predict the future, but some themes, some hot and trendy things going on.
So, my studies and my analysis is all based on economic factors, right? So I wake up every morning just reading the summary of the journal. For instance, inflation just came out. The inflation numbers just came out this morning, slightly higher than what we expected. So what's today's impact on the markets, right? Because I feel like, and again, I don't think a lot of people make the connection. Businesses and companies' ability to excel and grow are often impacted by our macroeconomic environment, right? And so with inflation now running a little higher than what we expected, although it's lower than what it has been, what's the impact on today's CEO's decisions? What decisions are they making today based upon inflation coming in a little higher than what we expected? I don't know, but I'm fascinated by that, right? I have my take on what that would look like. So, I'm really always looking at all things related to the macroeconomic environment. What's the trending look like? How do we think about companies' ability to perform given our declining interest rate environment, right? You would think that you should see some growth in companies because as it becomes cheaper to borrow, they will make those investments so that they can grow businesses. But we don't always see a direct correlation between lower rates and increased corporate borrowing. So I'm fascinated by that, right? Because that's the reason that we reduce rates, to spur activity. And so, I'd love to have conversations with folks around that are able to make and have made these decisions. Why wouldn't you borrow in a lower interest rate environment if you have that opportunity? If you have that opportunity to grow and invest in your business, what's pulling you back or stopping you from that? So these are some of the trends that I like to watch. And then also, all things related to outside influences on businesses, right? And so one thing that I did learn, or I have learned early on in my banking career, is that we would look at a lot of external forces that have bearing on how companies operate, right? And so, for instance, companies that are involved in manufacturing, what are the inputs into their manufacturing process? What are the price trends on some of those inputs or raw materials? Because that will have a direct bearing on what the company's financials will look like in a quarter or two. So I tend to, when you think about trends, I'm looking at macroeconomic trends as opposed to any of the particular trends inside of a business. Now, with that being said, certainly as a financial analyst, I'm the guy that would, working at a public company, I would probably be the only employee that would read the financial statements from beginning to end, right? Because again, what I have always learned through my training is that if you want to know really how a company's performing and what the performance will look like down the road, the income statement and the balance sheet will tell you all you need to know. On a public company, you read the annual report. You may have a 25-page annual report where the CEO is talking about how the company's performing and what the prospects are going forward. I get the same information from 3 pages. And so as I read those reports quarter over quarter, I'm looking at the trends. And in my mind, I'm thinking about what is the company's operation and performance going to look like 3 quarters from now? And I'm making those educated guesses based upon the financial statements and the trends that I'm pulling out of them.
Mm-hmm. That's interesting. If somebody's listening to this and they're like, it's really interesting everything you say, I want to get into this field. How does one get into your field? Maybe a person who is either a young person kind of starting off in their career or somebody who's looking for a career change. Like where would you recommend they spend time with everything that's going on in the job markets and trends and AI and tech and all of that? Like where would you say is the future for somebody in this career field?
Yeah, I would say a couple of things. Like, so one thing that I've noticed in the tech sector, and again, I'm sure I'd love to have a healthy debate on this. But I feel like coming from, 20 plus years in financial services into tech, I feel like the tech sector wants everyone to be generalist, right? Whatever the hot tech trend is, tech companies want every single one of those employees to excel in that area. So right now, regardless of what your role is at a tech company, every employee wants to know the latest and greatest on AI, right? And I think that's great. But when I have a question, a legal question, I don't want to ask an AI person. I want to ask a lawyer, right? So I want to talk to a person that excels in legal understanding and being able to help me assess legal risks. If I want to talk to the AI expert, I'll go to the AI expert, right? And so I feel like you have to have a general understanding of the hot topics and trends across the sector. But wherever you have experience and wherever you have a passion, be passionate about that area, right? Like as a financial analyst, I'm passionate about AI and I'll go and do my research and understand, but I'm never going to do that at the behest of being an expert in financial analysis, right? Because that may, while although that may benefit the company, it doesn't benefit my career to be a generalist, right? So that would be the first thing. And then the second piece would be I share with people, you have to develop relationships. You have to talk to folks, right? When we talk about mentorship, quite a few of the folks that I mentor, they're looking for mentors, people to help guide them. And I say that's great. I think they should be doing that. But I feel like you should broaden your aperture and broaden your approach. For every mentor that you have within the company, you should have at least one mentor outside the company. Because what you don't want is to have a singular or jaded view to markets and opportunities. And when you have three mentors at your company, you have limited view to things that are happening outside of the company, right? So I would tell young people, know where general trends are on hot topics. Be an expert in your particular area of study, focus, or passion, and make certain that you have internal and external mentors to help guide you.
That's super practical. I love that. The follow-up question that I know people think in their head right now, how do I find a mentor?
It's not easy. It's not easy. One thing that I have noticed, and I've spent time over my career, is I set aside a certain percentage of my workday to develop my own personal brand and develop opportunities to grow and excel, right? So when you're on all of those calls for work or you're on a project, very important. But I'm also spending time, 15, 20 minutes a day, either reading for self-development, strategizing for self-development, and those things are just as important as the scheduled calls, right? And so I would say make certain that you're investing in spending your capital on yourself, just like you're investing and spending capital to grow and develop the company that you work for, right? And so one of the things that I would do when I was in sales was certainly it's important to make certain that you're reaching out and talking to your prospects and talking to your customers. But also I would spend time just understanding where are opportunities to sell right now that we are not even tapping into, right? And how do I educate myself on what those areas are? And how do I take that from just a general conversation to execution, right? And so one of the things that I've always focused on, not only early in career, but even currently, is I really look at finding a way to address and solve complex problems, right? Companies have easy problems and folks are there to solve and address those. And then the harder problems either don't get the requisite resources or they don't get the right time or the right resources to solve, right? So I've always spent time in my career focusing on and addressing and solving the most complex problems. It's a really good way to build skill set and character. It's also a really good way to build and grow a career because people take notice of that.
Absolutely. I mean, as the famous saying goes, right? The companies want you to do one of three things: increase revenue, decrease cost, or minimize risk. Right. And usually those complex problems are within those three areas. So
Absolutely.
that's spot on. Yeah. I wish I had that advice when I was younger. Like that's, I did it the hard way. I found out all those things the hard way and the long way.
Yeah, no, that's okay. I mean, I think it's okay to understand and get an appreciation for those things through experiences. The question is, now that you know that, it looks like you do a great job of sharing that information with folks. And so I think it's all upside for folks to be exposed to those types of conversations.
Absolutely. Before I ask you my last question, where can people get in touch with you? They want to follow up and maybe just kind of learn about Venture Studios or the work that you're doing.
Yeah, so I would say right now, just working on. You can always find me on LinkedIn. Just Steve Mann. If you do a search for me on LinkedIn, you can find me there. I've got in the works through the Venture Studio a website that we're coming out. I think we're looking to launch in January. So that announcement will come out on LinkedIn. So you can, in the meantime, you can find me there. But we'll be fully on the web here shortly. And so, yeah, I think, I'd look forward to having follow-on conversations, rejoining, whatever the case may be.
And the last question I ask all of my guests, what is one question you wish people would ask themselves more often?
Yeah, I think it's interesting. I love that question. I would say in decision making, right? We always look at a complex question or a complex scenario, and we're looking to make decisions, right? And so what are the inputs to making those decisions, right? We're looking at what's the current assessment, what's the future assessment, and how will the decision that I make move us from current state to future state, right? So I think all of that analysis is fascinating to me. Where I wish I'd asked myself earlier are more questions around what are the impacts of acting and the impacts of not acting, right? Because we always gravitate towards the impact of acting. Hey, I'm going to make this decision, and guess what? Here's what I hope to get from this decision. Well, what happens if you don't make that decision? What are the consequences, right? And are the consequences of not making that decision worth not moving forward with that, right? Or are you taking an unhealthy level of risk in order to address those consequences, right? And so looking at both sides of the equation, I think, is where I really would have benefited from asking myself those questions more often.
I love that. Are you familiar with Tim Ferriss?
No.
So he's like a content creator. He does a lot of experiments and so on. He's an author. So he does different experiments. And one of the things he talks about is the cost of inaction. Yeah. And it's the cost, like, what is it going to cost you financially, emotionally, whatever that decision is, maybe from a well-being point of view, like 6 months from now, 12 months from now, 2 years, 3 years, and so on. And if it doesn't cost you much, there's probably not an exciting enough decision for you. But if it's going to cost you a lot, hopefully it will move the needle to help you kind of move forward. So, I love he does these experiments basically around like decision making and anything from A to Z. People who are familiar with him, I don't know how to describe him, honestly. He's just a experimenter. I don't know how to explain this, but yeah.
Yeah, no, that's an interesting point. I love that because I think, making practical application to financial services, we call that opportunity cost, right? When you make a decision on how you want to deploy capital, right? You're really looking at an opportunity to invest, and you're coming up or putting in targets in mind on what you think your return is. But opportunity costs really say, okay, what's the next best return on that dollar if you make a different decision, right? So you can take an investment and look for a 15% return, but could you generate 20% if you took that same investment and put it in a different opportunity, right? And so opportunity cost is the way in which we use to gauge that type of analysis.
I like that. Steve, I think we're going to have part 2 of this conversation. I feel it coming.
Very nice. Look forward to that.
Again. Yeah. I appreciate you being on the show today. Thank you for coming.
Thanks so much. I appreciate it.